This is Matt Russell from the FX Power Course, and welcome to the DailyFX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and this is the simple resistance line that I added a few reports back. So moving forward now, I would have a slight bearish bias against the pair. My first two major resistance levels would be the high of this long candle wick right here, which is just above that 86 figure, as well as that longer term resistance line. With that being said, as I do favor the short side here, there are no favorable risk to reward entries, as prices are a little bit too far away from any of those major resistance levels to warrant an entry. So over the next 24 to 48 hours, those are the two levels that I would be watching to set up short trades in the pair. The next pair is the Aussie Kiwi, and if you recall during last week's report, I was moving around this support line, not knowing exactly where it was. Initially, I had a slight bullish bias against the support line, as prices did not close beneath it, but we did have a close beneath it during yesterday's session. So now I'm actually going to flip over to the bearish side right now. What I would like to see ideally, let me zoom in a little bit here, to validate this line that I'm using, is for prices to come up once again and hit that line and have that line act as resistance. So over the next 24 to 48 hours, that would be my trade set up here, maybe around the 25.40 to 25.50 area, and you'd like to see prices find resistance at that area. So we might look to enter just at the previous support line, which should now act as resistance, with a stop maybe 50 to 75 pips above that line. So during tomorrow's report, hopefully I'll have some more concrete evidence as to which, certainly not which direction the pair is going to move, but maybe a favorable risk to reward setup. The next chart is the Pound Swiss, and this has been a tricky pair as of late. We had the bearish engulfing candlestick pattern here, as then we had a hammer candle right after that. As I mentioned during the last report, there were two conflicting candlestick patterns. With that being said, what I like here in terms of a short trade, this looks like a fifth wave exhaustion pattern here, typical for prices to make that new relative high and then fall back beneath the previous high and form a bearish candle. So moving forward now, I would have a slight bearish bias against the high of this candle wick right here, which is in that 179 area. However, my confidence is very low in this trade idea, which means I would need to have the most favorable entry that I can have. The most favorable entry would be actually just a few pips beneath the high of this candle wick right here. So that's a price level we can watch. Obviously, if your risk parameters are a little wider than my personal risk parameters, you might look to enter maybe 50 pips or so beneath that, maybe in the 78.50 area, but that's really up to you and your individual risk parameters. The last chart is the Euro Swiss. Not much has changed here. Again, still just waiting for prices to come and test that longer term resistance line. Again, this is a daily chart looking for prices. We might look to enter a short trade at the longer term resistance line with a stop maybe 50 to 75 pips above that line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.